All right, hey everyone, I'm Lauren Thorbjornsen, the Head of Communications at the Stellar Development Foundation. Thanks for joining today's webinar, where we're going to be talking about driving inclusion through compliance with FinClusive. Compliance can be a really meaty topic, and we've got the experts with us here to talk about it. We've got Candace Kelly, who's the GC at SDF, and Amit, who's the CEO of FinClusive. Candace is going to kick us off with an overview of Stellar and compliance. And Amit is going to provide an overview of the work FinClusive does, and then we'll talk together about how we can look at compliance, not really as a barrier to access, but that's border bound, but something that really drives greater inclusion. So we've got an exciting agenda here today, and then we'll open it up for Q&A for anyone in the audience who has questions after the discussion. For now, I'm going to hand it over to Candace Kelly, who leads legal policy and government relations here at SDF, again, to get us started.
Thanks so much, Lauren, and thanks everyone for taking the time to join us today. As Lauren mentioned, I'm the General Counsel here at the Stellar Development Foundation, and I will just jump right in, starting with just a little overview of both Stellar, the network, and the foundation. So first and foremost, what is Stellar? Stellar is a decentralized open network that connects the world's financial infrastructure. It's a global public blockchain, and it's built for interoperability and to further financial access and inclusion. It does that by helping to make money more fluid, thanks to the speed and scale of the Stellar blockchain to transfer value. And it helps make markets more open, because when financial infrastructure is connected, you have greater geographical and affordable access to markets. And ultimately, this empowers people because the Stellar blockchain means real ownership of the value in your possession. So that's the network. Let's turn to the foundation. So SDF's vision is a connected, interoperable world. We believe that embracing the digitalization of money can make financial systems more connected and more interoperable, and in turn, create equitable access to the global financial system, which is indeed our mission, creating equitable access to the global financial system. We're working to use blockchain technology to advance the evolution of money in a way that drives financial inclusion. We don't see the Stellar network as replacing the existing system, but enhancing it. So who are we? We are a nonprofit, non-shareholder Delaware corporation, which means that we are not a charity. We pay taxes in California and in the United States, but it means that our capital is only used to make Stellar a success. We want to put everything back into seeing a more equitable world, where we use the Stellar blockchain to democratize the system and create greater access to financial services. And so what we do to achieve those goals is divided, as we see it, into three core functions. First is to ensure the robustness and usability of Stellar. Second, to be the blockchain people know and trust. And we do that through transparency, documentation, being a speaking partner to regulators and policymakers, and being a resource for the greater ecosystem. And finally, to foster and develop sustainable Stellar use cases, which is what we're here to talk about today, is some of those use cases. So I'm excited to be joined today by Amit Sharma, who is the CEO and co-founder of FinClusive. FinClusive is a very active member of the Stellar ecosystem. They serve as an anchor or an on and off ramp to the network. They offer compliance as a service, and they have spearheaded the development of a compliance rulebook. It's an opt-in set of rules for ecosystem members to follow to meet their compliance requirements. And they do all of this with the goal of turning compliance into an engine for inclusion rather than exclusion. So without further ado, I will turn it over to the expert, Amit, to talk about FinClusive and all of the work that you're doing.
Thank you, Candace, very much, and Lauren and the Stellar Development Foundation for putting this together, and welcome to all who are participating. Thanks for that very healthy and kind intro. And as Candace said, we are FinClusive, a firm dedicated, as you can see in the name, to financial inclusion, and that really is the core of the partnership and collaboration with Stellar, because of that core mission, or the mission that is core to our foundation and theirs in driving financial inclusion. 2-3 quick points of just by way of context, some of which Candace had alluded to, that really has formulated our strategy in driving inclusion and a more interoperable world and interconnected financial world. One is that banking and finance obviously knows no borders, and everyone and most folks, coming into this webinar realize that. And I think regulators are catching up to not only the reality of that, but regulation continues to be somewhat jurisdictionally defined and bound. And in that regard, we need a set of rules of the road to ensure safety and soundness in broader financial system activities, which extend now well beyond traditional banking. The second is, as Candace had alluded to, we take a unique approach to inclusion by addressing some of the compliance, risk management, anti-money laundering concerns. Not only because of the obvious, which is you have to, regulators the world over are increasingly looking at these new financial market participants, intermediaries, non-bank financial entities, as undertaking more and more of core financial activities, issuing value, storing value, transferring value on behalf of their clients and counterparts. And as a result, we look at those as value added and not as this growing, burdensome, cost center that has kind of emerged over the course of time in traditional banking. Because compliance at the end of the day really revolves around one question, and that is, do you know who you're dealing with? And if we know better who we're dealing with, then we can provide better functionalities, products, and services. So what is FinClusive? We are a hybrid FinTech, RegTech company. The RegTech side is providing a full stack financial crimes compliance solution. It's built for both traditional institutions as well as modern and technology-enabled institutions, FinTech companies, crypto firms, virtual asset service providers, all API enableable that cover the panoply of your AML activities that form a robust and comprehensive anti-money laundering program that financial intermediaries need to have. From KYC and KYB on the onboarding to ongoing monitoring, a full suite of customer due diligence, sanctions, and global watch list screening, a whole host of enhanced due diligence tools from social and adverse media screening, deep and dark web, offline data, transaction monitoring, and the like. The second, and that's the FinTech side of the business, is that we work with organizations like Stellar for that global interconnectivity and these new alternative and fast growing ecosystems to move value. And the second thing we do is we connect to traditional banks. So we have access to a growing number of bank of record partners here in the US, which allow us, once you come through this compliance as a service gateway, you can be teed up with an organizational or institutional account with one of our bank of record partners here in the US, thereby providing an ability to hold funds in an insured, FDIC insured account here in the US, and to be able to create sub-accounts for your clients. And so now the mere holding of value and ensuring that you can hold that value securely is provided here with US bank of record partners. And the final point is you can move that value, and you can move that value in a couple ways. Through this platform, obviously through the traditional banks rails by connecting to our bank of record partners, ACH and international wires. Importantly, you can seamlessly move money also through the Stellar rails. And while there are issuing and non-issuing anchors, there are multiple forms of digital assets that are created and transferred via the Stellar network, or obviously the native Lumen. So we can transact now and move value on behalf of other anchors and or their clients and hold that value in a US dollar denominated FDIC insured account. By doing that, we become an on and off ramp here in the US, and we provide a compliance overlay and set of services to other anchors and our partners. So that's FinClusive in a nutshell. There's really in sum two kind of core parts of our platform. We've covered the compliance as a service, which is that broader single workflow full stack approach as I described. And then there are a couple elements that we find are unique in the marketplace for compliance services. One is a single stack for all of the comprehensive CDD and EDD enhanced due diligence capabilities, including access to providers in over 160 countries, because often we are looking at frontier and emerging markets where to do identity verification or validation, especially for businesses, legal entity verification, validation, registration documentation, and the like, you need to have offline data. So we have access to those services as well. know your business, not just individuals, but also know your business and all of the rules and global guidance now for beneficial owners and background due diligence. We can do so in a single platform with automatic connectivity to all the 50 states and territories, and then increased connectivity to do legal entity verification overseas. And then CDD Check Connect, which effectively is a multilateralization. Too often compliance is redundant and inefficient, and we have to do KYC over and over and over again. But say, for example, within the Stellar ecosystem, we can provide KYC services through our platform, and as a centralized provider, take away a lot of that redundancy and cost inefficiency. And the second piece is, as we talked about, the accounts and payments platform, which effectively allows you 3 core services. One can, the establishment of a US denominated account for your organization and or your clients, being able to ledger, subledger, and balance manage and cover your core treasury functionality. And then thirdly, be able to move funds, both via the traditional rails as well as the Stellar rails, all of which is covered with the essential compliance controls for anti-money laundering, anti-fraud, and the like. And so those are the core services for us. Who do we serve? We serve a number of organizations, primarily in the non-bank financial institution community. So your fintech companies, virtual asset service providers are the biggest part of our client base and partners, but also traditional non-bank financial institutions like money service businesses, payment facilitators, and the like crowdfunding platforms, and innovative banks and financial institutions, and select corporates or non-bank financial institutions like NGOs and IGOs. So that is the core of FinClusive and our platform.
Thanks so much, Ahmed. I think we did get one question that's very specific to that, what you were just talking about, which is, can you talk a little bit more about the on-off ramp process and the assets that you're using for that?
Absolutely. Apologies, as I have a puppy barking in the background, so my apologies for that. Absolutely. So we have an anchor built on the Stellar ecosystem, and what it allows us through various Stellar protocol, both SEP24 and then newly established SEP31, we can do payments to and from other anchors. By doing so, we can, excuse me for just one moment. Let me just get the puppy down. Just a second. Sorry, guys. When your puppy's a Great Dane, then the bark is a little louder. My apologies. Okay. So the on-off ramp, how does that work? So today we're a non-issuing anchor, so we don't issue our own asset on the platform. We have visions to do so in the future, but we can accommodate managing both USDX, Anchor USD, as well as XLM into and off of the on-ramp. And there's a number of mechanisms, including path payments and the like via Stellar, that can originate in issued assets from other Stellar anchors. So we are working with Stellar anchors in Latin America, Mexico and other parts of LATAM, Africa, Europe, that are also issuing their own assets for that transfer of value. What it allows us to do is take XLM in or USDX in. We have a conversion module that then transfers those assets into US dollar fiat and then deposits those assets on behalf of the anchor or their clients in the US bank of record partner. And the on-ramp is equally true. You can fund into that account, send monies in US dollar fiat into your account at the bank of record. We'll take those funds, transfer those either to USDX or into XLM, and then push those funds to another anchor from the other direction of flow. Importantly, we do 2 things as part of the compliance overlay. Every one of the clients and or the anchors themselves is KYC or KYB verified. Every client is given a unique FinClusive ID, so we don't have to uncover the sensitive underlying personal identifying information each time that transfer goes, but we have the unique FinClusive ID that's the interface for each one of those clients, again, individuals or businesses. And so therefore, you can also ensure that you can verify and validate both the sender and the receiver from a KYC perspective. I hope that helps answer that question.
Yes. And so one question I have is that when you were thinking through this model and this business model, you had lots of blockchains to choose from. So can you tell us a little bit about how you ended up choosing Stellar as the blockchain for your services?
Absolutely. So the first and foremost was the commitment to inclusion. We had looked at a number of different networks, and we continue to look at different networks that are emerging and growing. The core application to driving a more equitable access to financial services was a really important mission driver. The second aspect and why we chose Stellar is because its openness to create tools for any kind of organization and multiple kinds of use cases for those organizations and different anchors. We have folks that are just doing exchange activity. As you know, there are folks that are doing peer-to-peer value transfer for individuals, a la remittances. There are folks that are doing more trade finance for organizations, paying suppliers, vendors, counterparties in multiple markets. There's just so much richness to the financial exclusion challenge that Stellar is able to build tools to drive this. The second piece was that, given the backgrounds that we have from FinClusive as taking a compliance-centric approach, the openness to ensuring that the safety, security, transparency, and the core AML coverage was there. Obviously, you have to tick the regulatory boxes, but there was a huge openness from the beginning by Stellar, the leadership at Stellar, your good self, and others, to understanding the importance of compliance and doing so in a way that is modernized, efficient, and getting to the intent of security and transparency in financial intermediation. And so the openness and participation to the Compliance Payments Task Force and our growth of the global rulebook, the openness for many other anchors that have been introduced that need compliance services and run the gamut from don't know where to start to I know exactly what I need, but I just need a plug and play solution. And then obviously the attractiveness of the US market and the need for many organizations to come into and out of the US. A big motivation for FinClusive was to address the issue of de-risking, which is the denial of or pushing away of services to many organizations. And one of the hardest hit organizations or sectors was correspondent banking. So the ability to interconnect multiple jurisdictions through a safe, compliance-centric channel drove us to continue our work and growth within the Stellar ecosystem itself, and our ability to now be able to both directly and via our anchor in the future provide compliance services in addition to being an on and off ramp and the connectivity to U.S. banks.
So I just want to ask a little bit more about that concept of de-risking, because as you ticked through all of the things that you do with respect to KYB and KYC, it sounds very, very much like a traditional bank in terms of all of the things that you check. They sound exactly the same. So can you explain how your system is really driving inclusion, whereas you see that traditional banking system compliance process as de-risking and sort of excluding certain types of individuals or companies?
That's a really important question and has some context to it. So I had the good fortune of working in the US government immediately after 9/11, so September 2001, where it was one of the largest overhauls, at least in the United States, of our anti-money laundering framework and really the constructs of the Bank Secrecy Act, and where we expanded both the breadth as well as depth of anti-money laundering provisions that traditional institutions had to undertake and the rules that they had to implement to be AML compliant, right? So all of the KYC and KYB, all of your ongoing due diligence, your enhanced due diligence, your risk scoring, monitoring, reporting, but the breadth was also expanding, meaning the number and types of institutions that were now considered financial intermediaries or covered regulated institutions has grown. So non-bank financial institutions like money service businesses and payment facilitators, sure, that's a little understandable, but even car dealerships and gem and jewelry shops and alternative forms of value transfer. And now in the last 5 to 10 years, fintech companies, crypto and virtual asset service providers. The reality is that financial intermediation is growing exponentially outside of mainstream banking. And that's a huge opportunity from an inclusion perspective. But if I put my regulatory hat on, compliance traditionally and a lot of the rules are somewhat exclusionary in their ethos. It's really how do I if Candace comes into my bank, how do I understand and box Candace as a risk, right? From a financial engagement perspective, the kinds of products and services, the thresholds, frequency, volume of transactions that we could provide. And so compliance over time, when we increase the burden of what is required for AML compliance and increase the cost of non-compliance, many organizations, traditional located like banks, now do the cost benefit and say, you know what, it's just not going to be to my benefit to provide financial access to low, moderate income, the global poor, frontier markets and emerging markets, nonprofit organizations, money service businesses or remitters, because the compliance burden and the cost is too high. And the other aspect of it is that compliance is often piecemeal. And so there's a number of very good point solutions out there to do KYC or automated due diligence or advanced analytics, but too often they're not interoperable. And so organizations have to go to 7, 10, sometimes 12 or 15 different solutions to fulfill their whole compliance stack. And so there was a point of those 2 points. We needed to reorient compliance to one of inclusion, where we start with yes, and then really understand what the base risk, what the actual risk is, not the perceived risk of an organization or an individual. And the second was, let's streamline the process. So let's bring a number of capabilities in-house. That's not to say that FinClusive's compliance as a service stack is 100% proprietary. We have a number of proprietary built tools, but we take in and integrate very robust third-party capabilities that allow for a breadth of capability at a cost-effective way. And the final piece is this multilateralization effort, right? If we can be a provider of services in a robust and safe way, we've got a multi-tenant capability within FinClusive. So if 5 different anchors were originating clients, they're able to access those clients' information without turning that information over to multiple parties. So it's protected. But what you can now do between anchors is, instead of doing the KYC verification validation process over and over and over, you can do a near instant verification validation almost as a central utility. And by doing that, we now get the intent of secure access with an AML coverage with a breadth of capability that is now increasingly defined and required by regulators. And importantly, we're the bridge now that can come through the issuance, storage, and transfer of value in Stellar, but be the bridge to the traditional financial services space by being connected to US banks as well.
Great. So I think let's turn to actually just walking through a specific use case. I think you have some slides that we can help see how it really works.
Great. So this is an example of a use case. We're working with a great partner and anchor, Bicos in Mexico. We've got a couple of others in LATAM and Africa and Europe emerging. But a couple of use cases that this platform will help provide. There are not only organizations doing value transfer to and from Mexico, paying suppliers, paying vendors, paying counterparties, paying clients. But let's take the use case of cross-border remittances. It's money service businesses cross-border between the U.S. and Mexico are often considered by U.S. regulators, among others, as high risk. You have many day laborers and others coming across the border, earning in dollars, having to transport hard-earned cash back across the border, now having to convert those into pesos. So now you have a security challenge because of high inventory of cash assets in these exchange houses and the like, and the lack of ability to then do things with that cash, be able to pay bills, send money to friends and family, especially in this veil of high risk. So what do we do here? So think about a money service business, MSB1, that you see here on the top right corner on the US side. And the day laborer that uses that money service business, when they earn that cash, they go to that money service business and then they need to change it to pesos. What we do is we tee up the money service business and each one of their clients with an insured account here in the US. So once they earn those dollars, they can now put them on deposit into an insured account. Now what we can do is take those monies, transfer those to a digital asset that we can transfer over the Stellar rails. So pesos USD transfer and settlement over the Stellar rails that get then deposited on behalf of the client on the Mexico side And similar to us on the US side, BCOS has great relationships with multiple bank of record partners and an application that allows for that individual having earned hard-earned cash, US dollar cash, now can access via their mobile application pesos on the Mexico side. And they can do 2 or 3 things. They can withdraw pesos at a bank, at a number of ATMs. They can pay for utilities or other expenses, or they can send pesos to friends and family from a remittance perspective, and we can do it securely. Importantly, there are a couple of things to keep in mind here. One, the organizations through this ecosystem have all been KYB'd and KYC'd. The individual client at the tail end has also been KYC'd, so you have a full compliance overlay from an onboarding and monitoring perspective. The transaction and flow of funds is also transaction tracked, so you have an audit trail of the transaction and the use of those funds from an AML perspective. And thirdly, you take a lot of the friction away, regarding the security involved with handling large stores of cash inventory, dollars or pesos, but also the ability to now have those assets digitally for your use in both contexts makes the process seamless. So costs go down, efficiencies goes up, security is there, and regulators looking at this ecosystem can see that the inherent compliance elements are checked. So we've done some presentations to regulators like the Fed and Treasury, FinCEN, and others, that this ecosystem is an expansion of access to underserved money service businesses, day laborers, and clients that have hard time getting access to banking services, and they can transfer that value securely for their remittances as well as their day-to-day cash needs.
And so I see all of the compliance layer, and it also seems that these clients are depositing their funds and having a third party, the MSB, MSB1, for example, holding their value for them. And so under the new, relatively new, travel rule is, how does this system kind of meet the travel rule? I know there are lots of different solutions being developed out there in the blockchain world. So tell us a little bit about how you see the travel rule in this model.
Yeah, absolutely. And in fact, I'll tailor that into a question that I saw come over the chat or the Q&A in terms of licensing as well. So FinClusive is registered with FinCEN as a money services business, and we're actually in the process of expanding all of our state-by-state licenses. Importantly, given our connectivity to banks, various states look at where the source of funds are, who's custodying those assets, and because up until the Stellar component, we're never custodying funds for folks, we're never transferring value, that's always been done through the bank rails. But now that we turn on the Stellar anchor and the transfer of funds, this implicates a, quote, licensable activity. With that in mind, and per your question, Candice, yes, there are a lot of solutions that are being thought through kind of, in my humble opinion, somewhat overly technical as it relates to the intents of the travel rule. So if we think back to the intents of the travel rule that we had implemented, what we called the old wire transfer rule, et cetera, years ago, it was the ability to say between 2 intermediaries that are providing transfer of value between a sender and a receiver. The idea was to ensure that you can authenticate the sender's bona fides, the receiver's bona fides, and that the transfer of that value had in some way, sense, or form an attachment of that sender information so that it can be verified at the recipient end, and regulators and law enforcement that are needing to do that audit can do so. As I explained before, FinClusive provides a unique ID or identification number to every client, business, individual that comes through the system. So organizational or individual, an anchor or their client is run through KYC given a unique FinClusive ID. So now if a receiving anchor needs to do the verification of a sender, they do so at the time the transaction happens, where we can match the FinClusive ID to the underlying personal identifying information as part of the KYC verification. And that happens at the time the transaction goes. So now both parties to that transaction know that the unique Finc IDs match, and the bona fides of the underlying personal identifying information associated with that Finc ID also match. If there needs to be full access to that underlying information, then an official request by a regulator or law enforcement agency can then have access to that information, but that information is still protected within the system. The second piece is if there's a third-party organization like a fintech in a fintech or an anchor in a third country that wants to now send or receive value by an individual that they did not originate, they can also query the system and say, does that individual's bona fides check out, their PII, and we can provide the results of that PII verification without the actual underlying PII verification. But if the access needs through a legitimate regulatory law enforcement request, one can do so. And FATF and others have said that within the context of blockchain-enabled transactions, among others, is that you don't actually have to have the physical underlying PII information travel with the payment chain, but you have to be able to verify and validate on that score. So we believe that this system gets to the very intent of it, and we're having conversations actively with regulators to see how this comports to the intent of the travel rule and the idea that we can do instant verification and validation of the KYC data, but also ensure that all of the transaction data is attached to that. And so the last piece I would say is that just as we put a unique identifier on every client or customer or counterparty within the network, each transaction is also uniquely transaction ID'd as well, and now you have the Think IDs tied to those transactions too. Does that help, Candice?
Yes, thank you. I think that there are a lot of questions about the travel rule, so that was really helpful to have a very, I think sometimes the intent of the travel rule gets lost in the details of trying to be compliant. Right. And so let's zoom out a little bit and just sort of look at the compliance layer and the partnership between FinClusive and Stellar.
Sure. So as you can see here with this graphic, right, Stellar's got a growing network of nodes and anchors that are being built within their ecosystem. FinClusive is one of those anchors, and we provide what you see here, CAS services. Today, what other anchors do is they plug in via API directly to FinClusive's API stack for access to the compliance services and the ability to then set up and establish their own master account and sub accounts for their clients, and then to be able to move value, either using the Stellar rails or using the bank's rails. So the bank of record connectivity is in that context too. And so we are able to then provide, coming through that CAS gateway to payment providers, individual fintech applications, asset issuers that are anchors on the Stellar ecosystem or other wallets. We provide that compliance layer, so everyone that can come in is fully KYC'd, and then also being given access to the bank of record partners that we've established for them. Now, importantly, and then I saw a question on this earlier as well in the chat, is that do we ensure the KYC is done for each of the individuals transacting in value? And the short answer is yes. And while what we have done is simplified that process and enabled it via the technology so that the onboarding of a particular client can absorb the requisite documentary and non-documentary evidence to verify and validate an individual is who he or she says she is, or an organization is legitimate, and then attaching that to the KYC, KYB process, and doing so in near instantaneous fashion. Obviously, if enhanced due diligence is needed, social and adverse media or additional background checks, then additional time is allocated. The whole idea here is twofold. One, ensuring that as anchors grow on the platform, regulators are looking at them like they've looked at traditional financial intermediaries and expect them to have a kind of a full AML stack, including a robust KYC, KYB process to manage their customers. So that's what we provide in that stance. And regulators too, certainly in the US, in Europe and elsewhere, are looking at fintech and in particular virtual asset service providers as also needing to undertake those activities. And so what we do is provide that that service and connectivity to any organization in there that's connected to the Stellar network or that's not connected to the Stellar network. But the idea here is now being able to, just as Stellar continues to not only provide tools, but then enable others to provide tools within the Stellar ecosystem. For us, our contribution is the ability to provide a full service compliance stack that hopefully more and more organizations will engage, because they're going to see their AML obligations increase over time.
I think we both mentioned or made some references task force, but as sort of the convener of that task force, can you tell us a little bit more about the intent behind the rule book and how it's being used?
Sure. So about 1.5 years, 2 years ago, or I should say, several of us have been watching, participating, monitoring the ongoing friction that we see with regulators and the sector. And by the sector, I really mean that growing fintech and crypto virtual asset services sector. As activities grow, as product and services grow, and the increased cross-border nature of it, we've been watching as regulators, certainly in the US, but globally, contend with applying what have been traditional AML and financial crimes compliance rules to a much more evolved and tech-enabled financial ecosystem. So with that in mind, there have been a lot of kind of band-aid approaches to take, what really makes sense for traditional banking institutions, but makes much less sense for the virtual asset service community. So what we did was we said, look, why don't we put a how-to guide out there, leveraging, a community of people that are current and former regulators, financial technology professionals, banking professionals, payments professionals, and we took the Financial Action Task Force, which is the global standard setter for AML compliance. We took their recommendations on a robust anti-money laundering, counter-terrorist financing regime. We took the SWIFT and NACHA payment gateway rules. So the organizations that participate in those payment networks have a number of rules that they need to comply with in terms of disclosures, record keeping, data management, data protection, et cetera. We took the NIST guidance and the GDPR guidance, because banking and finance is not just about, hard dollar currency and coin transactions, but really is data. It's the creation and management and security of data, both personal data and now economic data. And so we distilled that into a how-to guide for organizations and regulators. And it's a dynamic rule book. So there have been some really good work from organizations like Global Digital Finance, GDF, and others with overarching principles that help set a really good stage of approach. And what we thought would be beneficial to the community is to make kind of an equal SWIFT-like or NACHA-like payments, guidance document and framework that people can understand and put together. Now, with that in mind, as we talked about earlier, banking and finance, especially through these networks, are cross-jurisdictional, cross-border, whereas regulation still, at least oversight, supervision, and enforcement are still jurisdictionally bound. So there were two challenges here. One is we constantly were getting caught up in, or many regulators get caught up in, what kind of entity are you? Are you a deposit institution? Are you a payment facilitator? Are you a non-deposit custodian? Are you an exchange? There's so many different rules that impact the type of entity you are. And secondly, given the cross-border nature, how do we create an incentivized self-governing structure? And so those were the two overarching goals, with the ultimate goal being one that's really an ethos of inclusion. So if we were to wipe the slate clean and design a whole new financial crimes compliance framework, we would design one that really had inclusion in mind, not inclusion as an afterthought. And too often we have this false binary choice between financial inclusion and financial sector integrity or protection. And we just don't think that that's real. We think that that is more inclusion, more security, more transparency. They're not false binary choices. So those are the intents of the rule book. So at the end of the day, we did three things. One, we oriented the rule book to one that drives for inclusion, because we think that financial system integrity and AML compliance needs to have an entire ethos change to one of inclusion. The second is that we took an activities and practices base. So if you issue value, you store value, you transfer value or provide liquidity, you're going to be covered, right? That's regulators will look at those activities and say, well, those are activities that traditional covered regulated entities now must have an AML compliance regime. So we looked at those activities and practices and said, if your organization is undertaking one or more of those, you'll be considered by regulators as quote unquote covered for AML compliance. And here's what that means. Here's what the 5 core pillars of an AML program look like. Here's what regulators will expect from those organizations when they supervise you. So we looked at a number of supervisory manuals for money service businesses, the FFIEC manual that US regulators use, and we distilled that into a set of guidance principles. And then we provide some tools behind it, risk assessment, internal risk assessment for the activities and practices, so that organizations can undertake a commercial and technologically reasonable effort to be AML compliant. And that's what the rulebook is. And at the end of the day, we drive a bi-monthly compliance and payments task force. We invite as many folks in. The rulebook is an open source document. We create it as a Creative Commons document. We believe that having it as a central utility pays dividends. And so we put it, and regulators are increasingly taking note, like the Fed, Treasury, FinCEN, OCC have all played an observer role or commented on areas of the rulebook. And importantly, we designed it so that it really could walk and quack like a duck, that regulators could look at it and say, okay, all of the guidance we've been putting together for AML compliance in the traditional sense, we really are now seeing something that resembles that. And that's where it's, I think, getting a lot of traction. And now we're kind of on a broader outreach for networks to adopt the rulebook or at least showcase the rulebook to its members, for jurisdictions that are struggling to update or modernize their AML legislation and regulatory framework. The rulebook is paying dividends there. And then even organizations, including some stellar anchors that are wanting to ensure that their policies and procedures from an AML perspective have the requisite components so that regulators, when looking in, can see that they are robust. And so that's what the rulebook is, and we invite anyone that would like to partake in it.
That's great, and having participated in the task force, I do think that we are, thanks to FinClusive's leadership, really leading by example in saying that these activities and practices are things that need to be regulated. We're not going to shy away from that, but we understand the technology and the realities of this ecosystem. And so let us show you how we can sort of self-govern. And I think ideally the regulators who have been listening and paying attention and watching we may be giving them sort of a blueprint for if they do decide to work together and reach some agreements together, that perhaps this will be a good way to start that conversation or further that conversation. So
I think that's right. And what we have found, Candace, I mean, you make a really important point that I think is worth re-emphasizing for the group, and that is, I think by preventing regulators proactively, here's how governance can be put together, framed, and incentivized in these networks versus being dictated to. You must comply in a square peg, round hole kind of way. That makes it very difficult. So being proactive and out front with the regulators, the guide is as much a regulatory guide as it is for the sector. And then the last piece I would say, which you touched on, is that there are attributes of this technology, like blockchain, the immutability of the ledger, the decentralized nature of how data is stored and protected and or shared and validated, actually lend huge tools for a more modern, efficient, and cost-effective anti-money laundering set of capabilities. And where traditional banking and traditional payments and transfers of value have not had. And I think this is where the most exciting pieces are yet to come. And I think the last 2-3 months are a tremendous guide because regulators are increasingly reaching out to the sector and saying, how can we leverage the technology to not only drive inclusion, but do so in a way that really adheres to the intents and purposes of a secure financial ecosystem, a la compliance. And the more that we can be proactive about demonstrating that to the regulators, the much better we're going to be versus being the recipient of regulatory action that is not innovative, regulation needs to be just as innovative as we see the technology innovations for payments and financial access in the sector. And so this is our attempt to aid both of them.
So it looks like we've piqued some interest from some folks. So Ahmed, what's the best way for folks to jump in and participate in the Rulebook, in the task force, and or just get access to the Rulebook?
Sure. So the Rulebook is open source. You can certainly, one of the easiest ways is if you go to the FinClusive website, FinClusive.com, you'll see a link directly to the Rulebook. Send a note to contact@FinClusive.com, which was on the on I think slide 9 here. Contact@FinClusive.com, and I can add folks to the Compliance and Payments Task Force if you'd like to be part of that dialogue. Every couple weeks we have a conversation on updates to the Rulebook for some of our outreach efforts. Sometimes there's 80 people on the call, sometimes there's 4 people on the call, but welcome those inputs. And then the Rulebook itself is open source, so it is, please provide comments and or questions throughout. And then what we try to do is check in regularly and update the Rulebook where we have sort of general consensus on where to drive strengthening of language, or because new rules or guidance that is coming out from regulators or FATF require us to do so. So we stay very close on that. And then a number of Compliance Payments Task Force members are regularly engaging with both regulators. Some are regulators that are observers to it in terms of your own jurisdictions. And so we are now kind of entering the phase of more proactive and formalized outreach. And there's a calendar in the meetings page. You'll see all the meetings notes are kept for every one of the calls, so you can see what the dialogue has been for various issues or issues that need to be raised, and then we can do so at follow-on meetings. And then there's a kind of on the meetings page an outreach calendar because that's the other thing we've also seen as hugely effective is instead of one-off organizations doing their pushes with various regulators, but by bringing an ecosystem of partners that are saying we're dedicated to a compliant, friendly ecosystem, doing that outreach in tandem with multiple organizations can pay dividends. So we're doing a lot of that organization too. So contact@FinClusive.com. If you go to FinClusive.com, you'll see View Rulebook, and that'll take you directly to the Rulebook itself, as well as the meetings page that I just discussed.
Thank you both. That was such an interesting and exciting discussion. And I know I want to leave a little time here at the end for any additional questions that might come in. We already have a couple. One of the first ones here, Amit, was for you, is what other geographies are you guys working in or targeting?
So we are global in nature. Today, as a US-based entity, we have a number of customers and clients certainly within the US, but almost all of them are operating globally in some way. They're either transacting globally, they have clients inside and outside the United States. We also have fintech companies, VASPs and others, both within the Stellar ecosystem and outside it, that are Latin America based, from Mexico all the way down to Argentina, Chile, Colombia, that we are increasingly engaged with. You can imagine Africa and Asia, a number of emerging and frontier markets that either have had traditionally weaker AML regimes, anti-money laundering regimes, or have had a challenge accessing the US banking system. Those are your correspondent relationships or organizations like fintech companies that are trying to penetrate into the US. And so the idea is to engage those organizations more and more. So our pipeline of counterparties and partners is growing globally, and we welcome more interest. So any and all folks really welcome you to reach out and see how we can be either a compliance provider for you and or a US on-off ramp, especially with our bank connectivity as we grow. We're about 2.5 years old, and with our compliance as a service product in market for the last year. And we're excited about launching this anchor on Stellar because the connectivity with this additional rails for driving a greater inclusion is huge. We just got off a call this morning with a Africa-based fintech doing really good work for freelancers, contractors, subcontractors with their application, and they want to transact via the Stellar domain. They need compliance services and a US on-off ramp. It's a great client and partner to engage with. So these are the kinds of use cases we're working with.
Awesome. This next question seems one for both of you. Based on, Amit, you said you've kind of been in conversations with a lot of different people and a lot of different types of regulators. So how do regulators see this ecosystem, and what do they make of it?
Yeah, I gotta be careful what language I use here now, Lauren, to put me on the spot. But as a former U.S. Treasury official, and our CTO was formerly at the Federal Reserve Bank of New York, running all IT risk and supervision, and so we come with a regulatory hat on, and so our goals is to leverage that history and expertise with much more modern applications of financial intermediation that are driving inclusion. We recently, I think, 2 weeks ago, Candace, Lauren, we did a joint presentation to the Fed, and it was a wonderful presentation because they brought in people that are focused on 3 core issues: financial inclusion, security and transparency, so compliance, and new tech. And this is an intersection of the 3. And so what we were able to do was to say, okay, folks, it takes an ecosystem of traditional banks, modern fintech companies and new technology applications, a concerted view to compliance, and an overarching goal of financial inclusion. And I think that joint presentation to regulators pays dividends. So to your question, Lauren, I think 2 things. I think there's increasing awareness and openness to new technology, new forms of value transfer and payments, new ecosystems. And I think the sector needs to sort of embrace that, because the intents of a secure financial system are hugely important. And what regulators care about is that the system can be protected and cannot be abused by illicit actors. We care for that too. And I think you can't have an inclusive society that's also an exploitative one. So the shared goals of inclusion and security, we believe are 2 sides of the same coin. And so from a regulatory perspective, we just approach it in that context. What is the regulator, what was the intent of certain rules of the road? They may have been for traditional institutions and less applicable in this modern economy. Here's how we can modernize that AML stack. And so we maintain a pretty healthy and consistent dialogue with a number of US regulators and increasingly overseas with standard setters and others. And we'd like to expand that. And the Rulebook is a vehicle to do that.
Yeah, and I would just echo that. I think the other piece of it is beyond just regulators, we also spend a lot of time engaging with policymakers and just walking through this. And we're still in very much an education mode, especially on the policymaker side. And the idea that this blockchain and cryptocurrency and the technology can actually serve a purpose of inclusion while still being a compliant system is something that people respond very well to, in my experience.
Great. If anyone has any other questions that they want to drop into the Q&A, we have time for a couple more. I have one here, Candace, I think that's for you, which is, how does Stellar's costs and processing times compare to the traditional banking rails?
Yeah, so Stellar has fees for transactions, but the fees are very, very small. And the reason that we have fees is not because anyone collects them, they're actually burned. But the reason that we have fees per transaction, per operation, is to protect against spam attacks, DDoS attacks, and the like. So with 1 Lumen, which is our native asset, which can...
Yeah, I see Candace is frozen here.
Hopefully she'll come back. If not, we can tackle this one question I think just came through also, that was about asking if we're going to share the video here in the PowerPoint. I can confirm that after this, the full recording will be available, and we'll have it on the SDF blog. So if anyone wants to go back and check it, they can. It seems like Candace might be off.
Yeah, she may dial back in here.
Okay. In the meantime, Amit, one question that I was, I know you and I had talked about before is, how do you think that this kind of plays in the scheme of DeFi, and with people who kind of think we could operate outside of the DeFi outside of the traditional financial rails, if we just had a DeFi system.
Yeah, and I see Candace is back as well. Let me just quickly touch on that. Putting both my ex-regulator hat on, and given the current dialogue with both regulators and policymakers, as Candace is talking about, regulation, if I'm a betting person, regulation is going up, not down. And secondly, a statement we I think both made earlier is that finance and banking in a more modern tech-enabled world is a data challenge. And so secure data, personal identifying information, economic data. So we're now transacting in zeros and ones, right? And so there's more and more, I think, oversight as to how, what the representations of that data is, how do we protect that data, how do we collect it, store it, share it, not share it, et cetera. So in any context, given, including the context that you provide, where you could have a kind of a completely open system, whenever we are going to be collecting personal identifying sensitive information, and if we're going to be transacting in financial data, which by definition is a highly regulated industry, anyone that's in that space that is transferring value, issuing value, storing value for others is going to be in that kind of bullseye from a regulatory perspective. And that's where I think, just look at the last couple of years with announcements by Facebook and Libra or others that rightly are saying, I've got a huge network, and if I could just open it to also the exchange of value, great, but you're now entering, by definition, a highly regulated environment. And so regulatory scrutiny is only going to go up. And so that's where our bet is. So I just believe that translating and transferring traditionally well-intended safety, security, financial system integrity rules to this new system in a way that's tech-enabled, leverage the attributes of that new technology, is inclusion-focused, and ensures that the protection of your personal identifying information and your financial data is going to be the future of regulation. And so we're trying to get ahead of that. So that's how I'd answer that.
Awesome, thank you. And now Candace is back, and we have about 1 minute left. So Candace, I'll let you wrap with what you were talking about with fees and processing times, and then we can wrap up our chat today.
Sure, sorry, I don't know what happened there and I dropped off, but I'm back and I don't know exactly where I dropped off. So the short story is that the fees are nominal and they are there for spam and DDoS protection, and processing times, transactions take roughly 3 to 5 seconds on the Stellar network. So compared to a traditional banking system, it's obviously essentially whatever your traditional banking system costs are that much more than the Stellar. Now, of course, the on and off ramps and the anchor, there may be other services that will tack on fees that are not the rails themselves, but in terms of just the network itself, it's open source and public, and the fees are there just for protection.
Awesome. Well, thank you both so much for joining us today, and thank you to all the attendees. Again, this recording will be put onto our blog in the next day or so you can go back and watch any of the information here that we shared with you. Thank you all, and have a great day. Thanks, Amit and Candace.
Thank you.
Thanks for having us.